Now, I'm really excited about this. We have Victor Menasce here. He's the author of The Great Canadian Takeover. Simon, just alone, I love the name of this book. I mean, really.
It's been my plot that Canadians can buy it all up and sell it back to the Americans.
Now, he is a true educator and a real savvy real estate investor. He believes that everyone, including you, can generate wealth from real estate, regardless of how much investment capital you have and regardless of where you live. In The Great Canadian Takeover, he unveils the secrets that he has used to amass a great real estate portfolio spanning 3 time zones in the U.S. from his office in Ottawa, Canada. Here to talk about real estate investing, his book, and all things real estate is Victor Menasce. So, Victor, welcome to the show.
Delighted to be here.
And it's great to have you here, get the information from the horse's mouth. So first question is the meltdown over in the U.S.?
Well, I would say it's over selectively. Real estate is always an intensely local business. And so while it may be over in New York City, it's definitely not over in Stockton, California. It really depends on the city. If you pick a city like Detroit that's been shrinking, Cleveland's been shrinking, those cities are still in a world of hurt.
But those are bigger problems.
They are bigger problems. It has to do with the ebb and flow of economic activity, absolutely. And obviously the real estate market follows that. Other markets that are very well known to Canadians, places like Florida, inventories are way down. There's very, very little inventory on the market. In particular, waterfront properties, they're being snapped up in great numbers. So it really depends on the locale.
So it's no different than here in Canada. I mean, we always talk, Simon, at the end of the day, real estate is regional. And even in the GTA, we could talk about areas that are just hustling right now and that has incredible activity, and we could talk about other areas that aren't.
That's absolutely right.
Okay.
That's absolutely right.
All right. Now, how does the increase in the U.S. interest rate affect the market for investors?
Well, we've seen over the last 45, 60 days, interest rates definitely have spiked, both in Canada and the U.S.
Correct.
And we've seen the sales numbers are down significantly. Certainly the numbers for June are down. I haven't seen the numbers yet for July, but all the reports that I've heard from anecdotal evidence is that the numbers are down as well.
Okay. So just reminds our listeners again that interest rate is such a key indicator in terms of what we call our real estate traffic, right?
Yeah.
It has a direct effect.
Now, but here's the thing. I mean, Canadians are doing something in droves that, ironically, Americans are not. So what do Canadians know that most Americans haven't picked up on?
Well, I think it's a few things. Our markets in Canada are generally quite expensive. The median price in Toronto was just reported this week is up to $513,000. That's a big number.
Crazy.
You take a city like Tampa, which is roughly the same population base, the median price is $149,000. That's a big difference. So
huge difference.
So it just looks like a bargain.
It looks like a bargain. The whole country's on sale, And then when you look at the other difference between Canada and the U.S., Canadian markets tend to be quite homogeneous. So if you pick a 3-bedroom townhouse, doesn't matter whether it's in Scarborough or in Brampton or whatever, the numbers are not going to be that different. You go to a city like Tampa, you're going to see a huge disparity in prices. You've got great neighborhoods, you've got so-so neighborhoods, and you've got very sharp dividing lines between those neighborhoods. It's much more diverse. So the opportunity to find bargains, the opportunity to find real investment opportunities is much greater in U.S. markets than it is in Canada.
Which is making it even more complex for Canadians to understand because, because you hear that all the time. Say, well, I went on Google and I found a house for $30,000 near the water. Well, there's got to be something wrong with that picture, yes?
Absolutely. It's complex on a number of different levels. Values vary according to location. They vary according to school district. There are many arbitrary dividing lines where you move on the wrong side of the street and now all of a sudden prices are $100,000 less. You don't see that typically in Toronto. You don't see that in Ottawa and Calgary. So that's definitely one big difference.
Now, maybe for our listeners, can you guide them in terms of what are some great investment areas for them in terms of stateside?
Let's segment it into 2 separate markets, what I'll call the hobby investor and then the professional investor.
Okay.
The hobby investor who's looking to acquire 1 or 2 properties, maybe they might use it as a second home down the road when they retire. There continue to be great opportunities in the Florida market, in Arizona, Nevada, places like that.
So it's pretty simple.
It's pretty simple.
Yeah. And you can almost buy anything. I mean, you're still buying it half the construction cost or close to it.
Prices have come up. I'd say they're pretty close to construction costs these days. In the U.S., construction cost is much less than in Canada. Most of the southern states' construction cost is, between $75 to $90 a square foot. You cannot get anywhere close to that here in Canada. And I would say that resale prices are close to that number today in many markets. Certainly in Phoenix, that's the case. That's the case in Tampa and many other markets. But if you look at the professional investor, the opportunities are in fact far greater. We're talking about multi-unit residential. We're talking about commercial, and I'll give you a simple example. I mean, I bought a stadium. Now I did not set out to go buy a stadium. Trust me.
Interesting. Okay.
This is going to be a good story.
Can we come and get popcorn?
This is an hour outside New York City. It's a 4,200 seat stadium, 28 acres of land, 46,000 square feet of buildings, and I bought it for about 3 cents on the dollar. I mean, it's crazy.
You bought Yankee Stadium.
No, it's not.
Yeah, 3 cents on the dollar, right?
No, this is Skylands Park. It's in a rural part of New Jersey, about an hour outside Manhattan.
What's the logic there, Victor? What are you doing with it?
We're in negotiations right now with a couple of teams for the 2014 season. We are also talking to a couple of former Major League players, potentially as a pro training camp type facility. Everything we do in our portfolio, we look to add value to it and then either exit through selling it or refinancing and holding it.
Exit strategies,
Yeah,
right?
it's always exit
Okay, I'm going to
strategy.
throw this at you because I can't help myself, but with all that's going on in Detroit, maybe you can give your input on that. So, of course, they're selling properties for, like Simon said, it's not on the water, but
They're giving them away.
30,000, 19,000, they can't give them away.
Absolutely. And, I personal choice, I've stayed away from the Detroit market. I like markets where there's population growth. Detroit's a shrinking city. The population is half of what it used to be. Cleveland's a shrinking city. There's a number of shrinking cities that I simply will not invest in. It doesn't matter what the price.
And you can't buy something that doesn't have income. It doesn't make any sense.
Well, many of these properties do have income. You can buy them for $15,000, $18,000. You can rent them for $800 a month, and you can convince yourself the numbers look good, and you can make your money back in a short period.
But high crime, vacancy rates, property management issues. I mean, when you bundle it all in, it really doesn't make any sense.
It doesn't make sense. I agree with that completely. My focus is really on multi-unit apartment buildings. I'm very active in the Chicago market, very active in Philadelphia, very active in Dallas.
And these are all great cities that you're mentioning.
Absolutely.
It just comes back to the same basics we've always talked about no matter where you're investing, and that is look at infrastructure, look at population growth, look at economic standards, and everything else.
That's exactly right.
Yeah.
Now, how do home ownership rates vary between our two countries, like meaning Canadians and Canada and U.S.?
It's very interesting to look at what happened over the last couple of years. If you go back to, let's say, year 2000, both countries had ownership rates around 65, 66% of the population. Up until 2006, home ownership rates in the U.S. spiked all the way up to 69.5%. And since that time have fallen back to 65%. So that's a big change over a 5-year period. Interestingly, home ownership rates in Canada are now pushing 70%. And that's also one of the reasons why Jim Flaherty and CMHC are starting to get concerned, because they're seeing a big increase in the home ownership rate and wondering if in fact we have a bubble very similar to what happened in the U.S.
Now, Victor, we're running out of time, but I want to ask you one last question. You wrote a book about investing in the U.S. called The Great Canadian Takeover. Now, we're talking about how Canadians are profiting in the U.S. What are some of the key points of the book, very quickly, and what advice do you have for Canadians looking to invest, other than picking up your book?
Well, the markets in the U.S. are vastly different from Canada. There are so many differences. Many Canadians are, in fact, reluctant to jump in because of those differences. There's, understanding the complexity of tax law, not just federally, but even at the state level. Just the way business is conducted. Closings are done with title companies instead of lawyers. It's so much that's different. And that's what we talk about in the book. It's really an educational piece to help investors prevent some of the obvious mistakes that I see so many novice investors making in the U.S.
So an easy investment, go to Amazon.com and pick it up.
Amazon.com, the book's available there. It's available at greatcanadiantakeover.com as well. Mm-hmm. And there's tons of online resources to help investors make some of the better investment decisions.
What a wealth of information. And boy, oh boy, I think you two need to do a seminar together. Just throwing that out there.
Well, I don't know what seminar, but we'll certainly talk. We'll certainly keep talking about it.
So, Victor, will you come back and either join us in studio or do a call in?
It would be my pleasure to.
All right, very good. Well, thanks again.
Thank you.